Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Over the last few trading days, the Australian dollar has had a handful of help. Recently, the better than expected employment report and a softer tone from the US officials about global economic growth got the bulls all excited, and over the last 4 consecutive days the market has pushed through the level now of 73 cents, which has triggered stops and now exposes the region of 73.65.80. It is assessed that from last week that the Australian Bureau of Statistics, or the ABS, said that full-time employment had increased for the 25th consecutive month. Along with this, no doubt, with the good employment figures, with the unemployment rate at 5%, which is a 6.5-year low, the positive employment rate may now start getting tongues wagging, as in terms of conversations on when the RBA is looking to tighten rates. Also, the US Federal Reserve Vice Chairman Richard Clarida said that the central bank's benchmark short-term rate is getting closer to a neutral level. This triggered prompt bearishness for the US dollar, and the market across the board saw buying. From a technical point though, the Aussie is getting to a point now where I feel that this is the last leg up before the turnaround. So I'm looking to sell into rallies, but I'm neutral for the short term and just to see how today plays out. Support at this stage is at 72.85.95. Well, the market is now pressuring the resistance, which is around 113.85 to 114.25. With the dollar index plummeting on Friday, does give some concerns. The dollar index posted its worst close last week with the low of 96.25. This fueled the rally in the euro, and now breaking the downtrend, the short term that is, this level at 114.25 is viewed as a cap, but if it breaks, it does give uncertainty to the outlook for the US dollar and the euro. Let's see how the market plays out. Support at this stage is at 113.55 at 265. Well, it would seem that my view on dollar yen is coming through after the two rejections from 114.20 has plummeted further on Friday, and now taking out the support level of 112.85 exposes the region of 112.15.20. It is assessed from there that buyers should come back into the market and see a rebound. Well, once again, the pound has been battered and bruised over the last few trading sessions, and with the uncertainty due to Brexit, still gives some concern the fact that we could see a lower pound and a heavy landing for the Brexit. UK Prime Minister Theresa May recently had the pleasure of announcing a still unpublished tentative deal with the EU that will see the UK maintain access to the European customs and the physical unions, but the number of concessions within the half plan are likely far outside of anything the UK Tories government would be willing to agree to. The resignation of Dominic Raab and Esther McVeigh also triggered uncertainty last week, with the market plummeting, as you can see here, with the support seen at 126.90 underneath does give concerns of around 122, resistance seen at 128.70 to 129.5. Safe haven demand has come back on the list due to the uncertainty in the equity market, along with Brexit and some other markets. Therefore, the gold has rallied, and now at this point is broke the level of 10, broke the level of 20. Now the next target is where all these spikes are, 1,233 to 36. Any pullback should find support now around 1,210 to 14. A little bit of cautiousness on trading the oil. If this is a flag, like we've seen before, the fact is we could see a further sell-off and look towards the region of 51 to 53. If you are trading, keep stops very tight in terms of the fact that the market could even plummet back to the lows that we saw last week of $55 a barrel, which was last seen in November 2017. Resistance at this stage and clearly capped at $58 a barrel. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day that's ahead.